There is a quiet habit shared by many people who eventually become wealthy. It rarely attracts attention and almost never appears in dramatic financial stories. Yet this simple investing habit quietly builds powerful results over time. While others chase quick profits or exciting opportunities, disciplined investors repeat the same small action again and again. Over years, that steady behavior transforms modest beginnings into real wealth. The habit begins with consistency. Instead of waiting for perfect conditions, successful investors contribute regularly. Markets move up and down, news changes daily, but the habit continues. Each investment adds another brick to a growing financial structure that becomes stronger with time. Many people believe wealth requires large amounts of money to start. In reality, the habit begins with small contributions. What matters is not the size of the first investment, but the commitment to continue. Even modest amounts can grow significantly when given enough time. This investing habit also removes emotional decision-making. Instead of reacting to fear or excitement, disciplined investors follow routine. The routine becomes stronger than temporary emotions, allowing them to remain calm during volatile markets. Another important part of the habit is long-term thinking. Instead of focusing on short-term price movements, investors look years or decades ahead. This perspective turns temporary volatility into normal background noise. Compounding plays a central role in this habit. When returns are reinvested, they begin generating additional returns. Over time, growth accelerates naturally. The process may appear slow at first, but patience allows compounding to become incredibly powerful. Many wealthy investors describe their success as the result of simple repetition. They invested consistently during good markets and bad markets alike. The discipline of continuing during uncertain times created opportunities others missed. Another benefit of this habit is financial awareness. Investors who regularly allocate money toward assets begin to pay closer attention to spending decisions. Each dollar becomes a choice between consumption and growth. This habit also strengthens patience. Investing regularly teaches that wealth rarely appears overnight. Gradual progress becomes expected, and slow growth becomes acceptable. Ultimately, the investing habit is not complicated. It is the quiet commitment to regularly place money into productive assets and allow time to do the heavy lifting. Another part of the investing habit is ignoring unnecessary noise. Financial headlines constantly predict crises, booms, and dramatic shifts. Investors who follow the quiet habit do not react to every prediction. Instead, they stay focused on their long-term strategy. By filtering out noise, they avoid emotional decisions that often damage portfolios. This habit also builds confidence over time. At the beginning, investing may feel uncertain or even intimidating, but as months and years pass, investors begin to see progress. Small gains accumulate, and the process becomes familiar. Confidence grows from experience rather than speculation. Another important element is automation. Many disciplined investors remove the need for constant decision-making. By scheduling regular investments, automation transforms investing from a difficult choice into a normal routine. Once the system is in place, consistency becomes effortless. The quiet investing habit also reduces stress. Instead of trying to predict market movements or constantly adjusting strategies, investors follow a simple plan. This steady approach creates emotional stability during unpredictable periods. Another advantage is diversification. Investors who contribute regularly often spread their money across different assets and sectors. Diversification reduces risk and protects the portfolio from relying too heavily on one investment. The habit also improves financial discipline in everyday life. When investing becomes a priority, spending decisions naturally become more thoughtful. Many investors begin evaluating purchases more carefully, considering long-term consequences. Another powerful aspect of the habit is persistence. Markets experience downturns, corrections, and periods of uncertainty. Investors who maintain their routine during difficult times often purchase assets at lower prices. This habit also creates a sense of progress. Watching investments grow, even gradually, provides motivation to continue. Each contribution strengthens the belief that consistent effort produces real results. Many people fail to build wealth because they search for complicated strategies. Instead of building simple habits, the quiet investing habit proves that consistency often matters more than complexity. Over time, This repeated behavior begins to shape identity. Instead of seeing themselves as spenders, disciplined individuals begin to see themselves as investors. This shift in mindset reinforces long-term financial growth. Patience is another quiet force behind successful investing. Many people expect quick results and become disappointed when growth appears slow. But experienced investors understand that wealth rarely appears overnight. Instead, it builds gradually through years of steady participation. Patience allows investments to mature and gives compound growth the time it needs to multiply results. Consistency also protects investors from one of the biggest dangers in finance: emotional decision-making. When markets rise quickly, people feel tempted to chase profits. When markets fall, fear pushes them to sell. The investing habit removes these reactions by focusing on routine rather than emotion. Another important lesson within this habit is accepting uncertainty. No investor can perfectly predict the future of markets. Economic changes, global events, and technological shifts constantly influence prices. Instead of trying to control the unknown, disciplined investors focus on what they can control. Over time, investors begin noticing something interesting. The market's short-term movements become less important than long-term direction. Day-to-day fluctuations that once felt dramatic eventually look insignificant on a long timeline. Another hidden benefit of the investing habit is learning. As people invest regularly, they naturally become curious about economics, companies, and global trends. This curiosity gradually builds financial knowledge. The habit also strengthens long-term thinking. Many financial decisions in life involve choosing between immediate pleasure and future security. Investors who regularly set aside money train themselves to value future opportunities. Another reason this habit quietly creates wealth is cost averaging. By investing fixed amounts regularly, investors sometimes buy assets when prices are high and sometimes when they are low. Over the years, investors who follow this routine begin to see the power of time. Time is the silent partner in every successful portfolio. Even moderate returns can grow into substantial wealth when they are given enough years to compound. This habit also builds resilience. Markets do not move in straight lines. Periods of decline can test even experienced investors, but those who have developed the habit of consistent investing rarely abandon their plan. Eventually, something remarkable happens. The routine that once felt small begins producing visible results. Investment balances grow faster as compounding accelerates. What started as small contributions slowly transforms into meaningful financial strength over time. The investing habit changes how people see money. Instead of viewing money only as something to spend, investors begin to see it as a tool that can work on their behalf. Every saved dollar becomes a small worker in a growing financial system. This shift in mindset is powerful because it encourages smarter choices. When people realize money can grow quietly in the background, they begin to treat it with more intention and care. Many people think wealth comes from large, risky moves in the market. In reality, it often comes from small actions repeated for many years. The investing habit removes the pressure to find the perfect moment or the perfect stock. Instead, it focuses on discipline and persistence. This simple routine slowly builds a strong financial foundation, even if each individual investment seems small at the time. Another quiet advantage of this habit is that it reduces stress. Investors who rely on discipline rather than prediction do not need to constantly watch market prices. They understand that short-term movements are normal and temporary. This perspective allows them to stay calm during volatility and avoid panic decisions. Over many years, this emotional stability protects their investments from costly mistakes. Time continues to reward patient investors. As years pass, compound growth begins to accelerate. The returns generated by earlier investments start producing their own returns. At this stage, wealth can grow faster than the original contributions. Many people are surprised when they realize that most of their portfolio growth comes from compounding rather than new money invested. The investing habit also encourages long-term responsibility. People who invest regularly often become more careful with spending and budgeting. They start asking simple but important questions before making purchases. Is this expense necessary? Could this money be invested instead? These small decisions may seem insignificant in the moment, but over decades they can make a huge difference. Another powerful result of the investing habit is freedom of choice. As investments grow, people gain more control over their future decisions. They are less dependent on a single paycheck and more capable of exploring new opportunities. Financial stability creates flexibility in careers, lifestyle, and long-term goals. This freedom rarely appears suddenly, it grows slowly through years of disciplined investing. The habit also changes how people react to economic news. Instead of panic during downturns, experienced investors often see opportunities. Market declines can allow them to buy valuable assets at lower prices because they invest regularly. These moments become part of the process rather than a reason to stop. Over time, this perspective turns uncertainty into advantage. Another quiet benefit is the development of financial patience. Modern culture often encourages immediate results, but investing rewards those who can wait. The habit teaches that progress may be slow at first, but persistence gradually builds momentum. Investors learn to trust the process rather than demand quick rewards. As the years pass, small contributions begin forming a significant portfolio. What once seemed like minor investments slowly combine into something meaningful. Many investors are surprised when they look back and realize how much progress was created simply by continuing their routine. The quiet investing habit proves an important truth about wealth. It is rarely the result of one dramatic moment. Instead, it is the result of thousands of small, disciplined decisions repeated over time. By committing to this simple habit, ordinary people give themselves the opportunity to build extraordinary financial strength. Another quiet strength of the investing habit is discipline. Discipline helps investors stay consistent even when motivation fades. Some months may feel uncertain or difficult, but the habit continues regardless of emotions. This reliability becomes the foundation of long-term financial growth. When discipline replaces impulse, progress becomes steady and predictable over time. This habit also helps investors understand risk in a healthier way. Instead of fearing every market movement, they begin to recognize that risk is a natural part of growth. Markets fluctuate, economies change, and prices move unpredictably. Yet long-term investors learn that staying invested through these changes often produces better results than trying to avoid every risk. Another important benefit is financial clarity. Investors who follow this habit regularly review their finances, goals, and priorities. This reflection helps them stay aligned with long-term objectives rather than short-term desires. Clear goals make decisions easier and reduce the temptation to abandon the plan. During uncertain moments, the investing habit also builds confidence in personal decision-making. Each consistent action strengthens trust in the process. Instead of relying on outside opinions or dramatic predictions, disciplined investors trust their long-term strategy. This confidence protects them from constantly changing direction. Over time, the habit begins influencing other areas of life. The patience and discipline developed through investing often carry into career choices, planning, and personal goals. People who practice consistent investing frequently develop stronger long-term thinking in many aspects of their lives. Another hidden result of the investing habit is reduced financial anxiety. Knowing that money is quietly growing in the background provides a sense of security. Even if progress feels slow at first, the awareness that a system is working creates calm and stability in financial decisions. As investments grow, the importance of consistency becomes even clearer. The habit that once seemed small now protects and expands a meaningful portfolio. At this stage, investors realize that the routine itself was the real secret behind their progress. In the end, the investing habit proves a simple but powerful idea. Wealth is rarely built through dramatic actions. Instead, it grows through small, repeated decisions made with patience and discipline. Those who quietly follow this habit give time and consistency the chance to transform ordinary savings into lasting financial success.